Benjamin, we know that the condo market hasn't been as heated as the rest of Canada's housing market. Tell us some of the key findings from your most recent report, GTA Condo Investment. And to be clear, it focuses on the Greater Toronto area.
Yes, absolutely. As you know, the story of the housing market during this crisis was that people were looking for low-rise detached units. They wanted space, they wanted a big place so they can have their office there. And the demand for those units went up to the sky, basically, and that's why prices went up dramatically. At the same time, the condo space was actually relatively weak, especially the resale market in the condo space, because people didn't want small units or to be in cities. This is changing in a very, very significant way. We see more demand coming back to the condo space, maybe because of the fact that detached housing becoming too expensive. They reach basically a resistance level, if you wish. At the same time, people are starting to realize that this crisis is coming to an end, and people will come back to the cities. And cities means condos, and demand for condos is starting to rise, especially among investors. That's exactly what we are seeing now.
In the report, you had mentioned that 50,000 Torontonians have left the city, to your point. How much of that population is going to come back into that city core?
I think it will come back. First of all, I think that we are underestimating population growth into Toronto. We are not capturing it in official statistics. Also, we have seen a significant increase in the number of non-permanent residents that are not being counted. So the damage, demographically speaking, to the GTA was not as significant as perceived. But I believe that cities will shine in the future. I think that people will come back. And even if you bought a house 2 hours away from Toronto, if you need to work in an office, and I think that many people will come back to the office, maybe you will have to rent a place in the city as they do in Manhattan, London, or Berlin. I think that will be the reality. And it's starting to happen already. And investors are taking advantage of this trend. They are basically monitoring this trend very, very carefully, and we see a significant acceleration in activity among investors, taking advantage of the fact that interest rates are very, very low, and realizing that rent eventually will start rising.
Let's talk about rents, because the report had mentioned that the rental market saw 13% decline, I believe, in July of 2020. Is that coming back up?
Yes, I believe that the fundamentals of the GTA housing market haven't changed in any significant way. This is a short-lived change that we will go back to normal after this crisis is over. So 2022, 2023 will look very much like 2019, if you wish, in terms of the housing market and the rental market. Demand for rental units will go back. You will see non-permanent residents, students coming back. You will see new immigrants coming back. Demand will be there. There will not be enough supply. So rent will start rising. And I think that investors are starting to realize that that's the case, especially when interest rates are so low.
I hear you mention cities like London, Berlin. Are we still affordable when you take a look around the world? Where do you see our prices headed?
Well, the short-term story is maybe we are overshooting. We know that at this point, prices are rising at 20% year over year. That's we cannot sustain that. That's too fast. And one of the reasons why prices are rising so quickly is the realization that interest rates are so low and eventually they will rise. So many people want to take advantage of those windows of opportunities when it comes to interest rates. So maybe we are actually borrowing activity from the future, and the future will not be as great, let's say, next year. So maybe we are accelerating now at the expense of next year. That's reasonable. But from a long-term perspective, I believe that the fundamentals of the housing market in the GTA are consistent with higher prices. So if you think that Toronto is unaffordable now, you wait. Because you look at the cities like Berlin, as I mentioned, London, Manhattan, we know that they're unaffordable. We know that the GTA will continue to grow. The demographic story is positive and will become even more positive, and supply is an issue. So the only way to ease the pain when it comes to affordability is to introduce a rental solution to the puzzle we call the GTA housing market. We need more rental units, more purpose-built units in order to make sure that there is an affordable channel in this environment.
Let's pick up on something that you had just mentioned with respect to supply, and that is always a big issue in the housing market. What is the status when it comes to the condo market?
Well, at this point, we have seen a significant increase in units coming, the number of units coming into the market. And that was one of the reasons why we have seen rent going down. But this is coming to an end because you saw actually many developers slowing down a little bit during the pandemic. That will be resumed. So we will like to see more supply coming to the market. But what I would like to see is purpose-built supply, not just condo. The condo space cannot be the rental space, 100%. You need purpose-built. It's starting to move in the right direction, but still a very slow portion of overall activity. Another factor, which is very interesting, is the fact that about 35% of investors are still in negative cash flow. They basically lose money on a monthly basis. And when we ask them, you are losing money, why are you doing that? They say, no, you don't understand. We are not losing money. Somebody is paying a portion of our mortgage on this unit, and the value of this unit will continue to rise over time. And you know what? They're right.
You have probably heard, just as we all have, that Canadians are sitting on approximately $200 billion in savings. Is that going into the housing market?
Absolutely. We are seeing a situation in which this mountain of cash that is sitting on the sidelines looking for direction is finding its way into a larger down payments. We are seeing more things happening. The number of people that are using their units as a cash flow generator was doubled over the course of the pandemic. Namely, they're renting their basement to get cash flow. This number doubled. It's about 10% now. We also are seeing a significant increase in the number of parents being used as guarantors for the mortgages of their kids. So people are using all kinds of tricks to ease the pain and to take advantage of extremely low mortgage rates. That's exactly what we are seeing now in the market.
The federal government is going to table a budget shortly. Any expectation or any speculation, rather, as to whether or not there will be anything there for the housing market to cool the housing markets more specifically?
Well, as you know, there are a lot of speculations. People talk a lot about all kinds of options. I don't think that the government or the regulators need Bay Street economists to tell them what to do. They know what to do. And I think there will be some measures that will aim at slowing down demand. But the real issue, as you suggested, is supply. And this is something that we have to start working on. Yes, it's long-term. Yes, it's not tomorrow. And for tomorrow, we'll have to deal with some demand issues. But the big issue in the GTA and other places like Vancouver is simply lack of supply, given a significant increase in demand.